For today's cryptocurrency and Forex news, the Bitcoin leads crypto rally as market shrugs off as jobs shock. The gold edges higher after a drop following a robust US jobs report. The dollar edges lower as currency markets pull back on Friday's moves. Australia had recently lagged a record trade surplus on strong commodity exports to China. The yen pressured expectations that the Fed will hike interest rates sharply. The Eurozone bond yields fell back then after having gained following the jobs data on Friday. Bitcoin spearheaded a rally in crypto tokens Monday as investors turned to digital assets in the wake of robust US jobs data. Bitcoin has its sights set on $25,000, it seems, he said, following its rally last week after a few difficult months of trading. The momentum indicators will be fascinating here as a recovery appeared to be losing steam during the last ascent in late July. Gold edged higher after its biggest decline in 2 weeks, following strong U.S. jobs growth suggested the Federal Reserve is likely to persist with steep interest rate hikes to curb inflation. The dollar fell on Monday, losing some of the gains it had made from Friday U.S. jobs data, as currency markets pulled back on their initial reaction and waited for Wednesday's inflation data to give more clues about the Federal Reserve's next steps. The Australian dollar rose 0.3% to 0.69 to the dollar as data showed that despite sluggish imports, China's appetite for industrial metals, Australia's top exports to the country, remains steady. Australia had recently lagged a record trade surplus in strong commodity exports to China. The Japanese yen fell 0.3% against the greenback to 135.34 and was the worst performer among its peers in Asia. Japan lagged its first current account deficit in 5 months in June, as rising commodity prices saw value of imports largely eclipse exports. The yen, along with the most other currencies, was also pressured by expectations that the Fed will hike interest rates sharply when it meets in September. Eurozone bond yields fell back down after having gained following the jobs data on Friday. Italian bonds appeared to brush off the decision by Moody's to lower Italy's ratings outlook.